So good news for existing variable rate mortgage holders, adjustable rate mortgage holders, and anyone that has a HELOC, as well as any unsecured lending. All of your interest rates have been cut by 0.25% effective today. Your bank will likely adjust the prime lending rates over the coming days, so you'll see that impact on your existing mortgages going forward. If you have a fixed rate mortgage, nothing will happen, as this policy rate only applies to variable rate and floating rate mortgages. Now here's a snapshot of the current market with the rate. So what I'm showing you here is inflation, which is the yellow line here. We have the Bank of Canada overnight rate, which is the red line. And then we have the bond yields, the 5-year bond yield, which essentially is fixed rates. So you can see that inflation has now been controlled. It's been down here to the 1.9%. The next reading is next week. We'll see if it ticks up or not with the recent tariff news. But because of that, the Bank of Canada has now gone on to 7 consecutive rate cuts. And today's rate cut puts them almost exactly in line with the 5-year bond yield, which means fixed and variable rates will essentially be on par now, or neck and neck. So they haven't been this close since probably back here in October of 22. However, the direction of rates was going up, and now the direction of rates is going down. So that's good news. Inflation, we'll see what happens with that. But overall, good news for variable rate holders. Maybe not the greatest news for the economy with the tariff news, but if you're thinking of getting into a home and you're thinking of getting a variable rate mortgage, that's good news. Or if you have an existing variable rate mortgage, that's also sort of a good news story. I want to show you the actually existing monetary policy report at the Bank of Canada's website. So this was posted in February. So this is their projections in February. The next one comes out at the next Bank of Canada meeting in April. So we'll see what the update looks like. However, you can see that the forecast still shows that 2.5% is probably where the overnight rate will land. So today it was dropped to 2.75. So the bank is projecting one more rate cut. However, it does have the potential to get down to 2.25. The range is 2.25 to 2.75, but they're pricing in at least another 0.25% rate cut. If you consider what the major banks are all doing, I'll bring up this forecast from a little while ago, which shows the overnight rate was 3%, and as of today, that's now 2.75%. And if you look at what the projections are from each bank, say by the end of this year, BMO is suggesting the rate will be cut 0.5%. So now that would be an additional 0.25% after today's cut.